Continuing on from my previous video, I will now cover tips 11 to 20. So if you haven't listened to the first 10 tips, then go back and watch that video first. Also, don't forget to hit the like button and subscribe to our channel. Hi, my name is Mark Lloyd. I'm co-founder of Property Master Academy, and I've been a property investor for over 17 years. So let's get on to the remaining tips. Tip number 11. Understand the different finance products. Now, before investing in a property, you should consider the different finance products on the market and which one you'll need, because some products are harder than others to obtain. Obtaining a mortgage for your investment property rather than buying with cash provides the opportunity to expand your portfolio that much quicker. As such, finding the right mortgage product can provide a great opportunity for investors, but trying to find the right product can be a challenge, so always use the services of a good broker. We can put you in touch with one if you need one. Now, some mortgage products can be harder to obtain, such as holiday let mortgages and HMO mortgages as an example. However, obtaining a buy-to-let mortgage is relatively straightforward, providing that you pass the relevant criteria and are eligible for the mortgage. It's very much a tick box system, and as long as you satisfy the criteria and have good credit, you should get the mortgage. Buy-to-let mortgages are the most common type of mortgage for investors, but if you're looking to do a flip, then you should really use bridging or crowdfunding. As you may know, we operate a crowdfunding platform, so get in touch if you need help financing your next project. The amount of cash deposit you will need varies, but on average you will require 25% for a buy-to-let mortgage, whereas bridging or crowdfunding ranges from 30% down to 10% and sometimes 0%. Tip number 12, get to know your ideal tenants and their needs. Now, picking out your target tenant, or customer as I prefer, and understanding their needs is crucial when it comes to property investment. By making these considerations at the start of your journey, it can help you decide on the type of property you invest in and which location. For example, students will have very different needs compared to a young family. In fact, they will likely be in different locations altogether. Students want to be as near to the university as possible, with good transport links and places for them to enjoy an exciting social life. The UK has a wealth of higher education institutions with global reputations, so the demand for student property continues to grow. There are some great benefits of having students as well. Firstly, their parents act as guarantors, so you are guaranteed the rent. Secondly, students are exempt from council tax. And thirdly, they are usually looking for rooms 6 to 9 months before they start university, so you can sit comfortable knowing that your rooms are let long before the time needed. As for tenants that are looking for residential properties, they will probably be looking for a property in an area with good job opportunities and good leisure facilities and good schools if they have children. In fact, good schools is often the biggest motivation for moving to a particular area. Deciding on your ideal tenant or customer and considering what it is they want in a property can help you decide where, what type of property and design according to your tenant's needs. Thinking about how to find the right tenants shouldn't be an afterthought. Once you have bought your property, you should be thinking about how to find the ideal customers at the very start of your journey to invest in property. Finding the right customers starts with offering a great property in an in-demand location. Tip 13, exercise due diligence at all times. But what is due diligence? Well, due diligence is referred to a lot in the property industry, but you may be left wondering, what does it actually mean? Due diligence in property is the process of assessing and evaluating an investment property before you invest. By exercising due diligence, you can thoroughly understand the property's potential, as well as any potential risks. Investing in property is a big step, so it's important that you understand any risks that are involved. With due diligence, in other words, comprehensive research, you can avoid common pitfalls and costly mistakes. This research should also help you to determine whether the potential investment property will help you to achieve your goals and target the right audience. Exercising due diligence. Well, here are some of the ways to exercise due diligence throughout the process of investing in a property. Check that the property will generate a significant rental yield, as without high yields you won't make as much profit through rental returns as you would like to. check that the location of the property has potential for strong capital growth and demand for rental properties due to a large population of prospective customers. Research the customer population in the area to ensure the demand is there and what properties in the area have sold for. Due diligence is a vital part of property investment. It can help to ensure that your investment is worthwhile, that you have a well-considered and responsible approach. It can also help you to avoid errors and risks that could have easily been avoided with some research. Due diligence is a process that should be followed in any business decision, negotiation, or investment. Property investment is no different. Tip 14, always have an exit strategy. Now, an exit strategy is an essential part of any investment plan. An exit strategy is a plan that an investor has for when they come to sell their properties. Now, it might feel counterintuitive to put an exit strategy in place before you have even invested in a property. However, it's important to be prepared so you can maximise the profit and the potential of your investment. Now, each investment will have a different exit strategy based on their own goals, circumstances, and preferences. What's important is that you feel personally and financially comfortable with the exit strategy that you implement. Remember, however, that property investing is for the long term, so you shouldn't be too concerned about market fluctuations. Because every investor will have a different strategy, their key considerations before putting the plan together will differ. Generally, though, there are some important factors that all investors will need to consider, such as risk level, how long you want to invest for, how you will exit, and who your target buyer might be when selling the property. Will it be a first-time buyer or maybe another landlord? Tip 15, going it alone or with a joint venture partner. Now, when it comes to investing, you might be unsure whether to invest alone or invest with somebody else, maybe a friend or partner. Investing in a property with a friend might sound like a good idea, but you need to make sure that both your goals are aligned, otherwise it just won't work. If you decide to invest with somebody else, you need to remember that all of your financials will become interlinked and will be taken into consideration by any lender. You should decide at the outset roles and responsibilities so there is no confusion later on. If you're buying through a limited company, then make sure you have a shareholders agreement that covers any disputes. If you'd like to be in control of your investment and prefer to be independent, then investing alone is probably the best option for you. Tip 16, add value. When looking at properties to buy, you should always look to ways to increase the value of the property. Not only will this increase the amount you receive when you come to sell the property, but it also means you can refinance and potentially extract some of your capital to use towards your next property. That's the BRRR model I mentioned earlier. There are many ways to increase the value of a property, from a new kitchen and bathroom to a new extension, or maybe building another property alongside. Tip 17, buy BMV, below market value. Now, buying below market value is a key way of making sure that you're locking in your returns as you make your money when you buy. So buy correctly in the first place and you should have a good property investment. Of course, buying BMV can cover lots of things. For a lot of investors, it means buying at a discount. But it can also mean that you're buying below the potential value if you spot something where you can add significant value. Tip 18, always keep your plan under review. Keeping property investments under review is extremely important. A regular review will help you to feel organised and more confident about your next move. It can ensure that you don't stand to lose money, and it can also help you to keep track of your financial goals. Speak to your accountant if you're considering doing any changes. Tip number 19, continue to learn and expand your knowledge. When you start on your property investment venture, it's important to take all of the information you can get and conduct thorough research to ensure that you're making the right decisions. Now, whilst learning at the earliest stages of property investment is crucial and the key to success, you should never stop learning. Even when you've been investing for years, have a growing portfolio and think you know all there is to know about property, then you should still make time to expand your knowledge. Even today, I still attend courses after 17 years of investing. Tip 20, the last one, expand your network. In any industry, expanding your network and having a wealth of useful contacts can always come in handy, and property investment is no different. We often refer this as our power team. Those people can help you on your journey and can provide knowledge, support and resources if you ever need them. They are there to help you make money. So that's it. That's my top 20 tips for starting in property. I hope you found this video useful, and if you have, then please hit that like button and also subscribe to our channel so you get notified when new videos are uploaded each week. Thanks for listening.